A guide to Fidelity bond investing is designed to provide individuals with a comprehensive understanding of this investment vehicle. Fidelity bonds are a type of fixed income investment that offers a relatively low risk investment option. To begin investing in Fidelity bonds, it is essential to understand the key concepts. Fidelity bonds are debt securities issued by corporations to raise capital. When an investor buys a Fidelity bond, they essentially lend money to the issuer, who promises to repay the principal amount with interest. The first step in Fidelity bond investing is to determine your investment goals and risk tolerance. This will help you decide which type of Fidelity bond to invest in. There are various types of Fidelity bonds available, including government bonds, corporate bonds, and municipal bonds. Government bonds are generally considered to be the safest, while corporate bonds offer higher yields but come with higher risks. Once you have determined your investment goals, you can start evaluating individual Fidelity bonds. Look for bonds with high credit ratings, as they are less likely to default. You should also consider the yield, which is the return on investment you can expect to earn. A higher yield generally means a higher risk, so it is crucial to strike a balance between risk and return. In addition to evaluating individual Fidelity bonds, it is essential to diversify your portfolio. This means investing in a mix of different types of Fidelity bonds to minimize risk. You can also consider investing in a Fidelity bond fund, which is a mutual fund that invests in a portfolio of Fidelity bonds. To get started with Fidelity bond investing, you can open a brokerage account with a reputable online broker. You can then use this account to buy and sell Fidelity bonds. It is also a good idea to consult with a financial advisor, who can provide you with personalized investment advice and help you create a diversified portfolio. Best practices for Fidelity bond investing include regularly reviewing your portfolio, rebalancing your portfolio as needed, and keeping your investment costs low. It is also essential to keep in mind that Fidelity bond investing is a long-term investment strategy, and it may take several years to see significant returns. In conclusion, Fidelity bond investing can be a valuable addition to a diversified investment portfolio. By understanding the key concepts, evaluating individual Fidelity bonds, and diversifying your portfolio, you can make informed investment decisions and achieve your long-term financial goals.